Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Robert Salter and Malli, Kini.
Hello and welcome to The Tax Factor. I'm Robert Salter.
And I'm Malli, Kini.
This is our 100th edition of The Tax Factor. And before we dive into this week's main topics, we thought it would be interesting to look back over the last 2 years and see what's been happening. So we've had 2 Prime Ministers, 2 Chancellors of the Exchequer, 3 major fiscal events, and an election in that period. Malli, tax used to be boring, but since we started, I don't think there's been a week that hasn't seen some sort of tax news, tax development, tax issue arising.
You're absolutely right. It has been very turbulent, especially looking at the different tax rates like dividend allowance cuts that have happened over the last few years. Where looking back in April 2023, the government reduced its tax-free dividend allowance from £2,000 to £1,000. Now it's dropped again to £500 in April 2024. It seems to be a never-ending amount of policy changes, for sure.
And I do have to say, I think on occasion, some of those policy changes actually create more cost for HMRC than they actually result in actual tax receipts. Because having somebody who's a small shareholder, for example, suddenly having to declare extra income for £500 or £501 in effect, it seems pretty ineffective and inefficient in many respects from a wider admin perspective. I think it's penny wise, pound foolish on occasions from the government of both political hill.
If you sort of pick up on that dividend point, I mean, this change has affected millions of investors and small business owners. They found themselves paying tax on income that was previously untaxed. It's sparked widespread coverage in personal finance media and caused a lot of people to rethink how, as you say, they change their behaviours and take profits from their companies or investments. So from today's perspective, it really marked a turning point for individual shareholders and owner-managed businesses. It's caused quite a significant shift in the tax landscape.
Yeah, so again, another one of those changes we've seen in the last couple of years is the employer national insurance contributions rise. Now, obviously, if you look at the Labour Party manifesto when they came in, they promised no increase in effect, employee national insurance, not employee income, just income tax generally and VAT, which are the 3 ways of increasing tax receipts. Obviously, from, in effect, this April, employer national insurance has gone up from 13.8% to 15%. And again, they've obviously then also reduced the starting threshold where the employer pays national insurance from £9,100 to £5,000. That's again been a massive, massive shift. Well, it will be a cost to employees. Rachel Reeves claims it's not. So she hasn't increased the cost for the national employees in any way, shape or form. That's basically, I think, I would suggest fibbing. Labour Economics 101 always says employees don't really worry about, is it employer national insurance, is it salary, is it pension contributions? They just look at the total cost of employment. The reality is they will absolutely either be increasing costs to consumers, and let's be honest, workers are consumers, or trying to reduce salary rises and things like that as we go forwards. Again, it's been one of those things which is, in inverted commas, easy to do in the first instance. Employers don't directly vote, but it does actually create implications for everybody, and it creates more problems for the economy.
Well, Robert, it's a bit of a fudge, isn't it? She's trying to thread the needle through meeting her manifesto pledges of not touching what she'd thought from an income tax, VAT, and employees' national insurance, I would presume in this circumstance, but still trying to raise further taxes. All of these changes doesn't really take into account taxpayer behaviour, right? Which seems to be the underlying theme to most of these policy changes. Talking about these national insurance elements, I mean, I think it's really hit a lot of businesses hard, especially in the retail and hospitality sector, who are really feeling the effect of these changes. Many had already started planning for higher payroll costs, and the headlines repeatedly highlighted that risk to hiring hours and wages. It's become a bit of a hot potato.
Yeah, and I do think it increases unemployment because some companies will think of where do they employ people, or can they use AI or just technology generally more efficiently to actually reduce the number of staff they need. It is the sort of thing that creates unemployment. Okay, well, there's another subject that we've talked about before, but it's something that Nimesh, our CEO, is very kind of hot on, and that's the fact that obviously the income tax thresholds, for example, have been frozen and for 3 or 4 years already, and they're going to stay frozen at least until April 2028. So that obviously results in a lot of people being pushed into tax if their income's under £12,500, or being pushed into things like the 40% tax band when they haven't actually had any change in their lifestyle or in their income in any meaningful sense. They've just had wage inflation pay rises. So again, it's, in some ways it's an easy step for politicians, and they, again, both parties have been doing it, but it is shocking in many respects. And certainly I saw something recently which says if you look at the higher tax band, which is basically applying from £50,270 upwards, something like 14% of adults in the UK are now liable to that higher tax band. When in effect, you go back to 1987 when Nigel Lawson kind of created the modern tax system, from an income tax perspective at least. It was about 3 or 3.5% who were liable to the higher income tax. That just shows you how significant that tax creep has been.
I completely agree. I think it's quite insidious, and it's a good way of raising taxes in a stealth manner, isn't it, Robert? And it doesn't grab the headlines as a couple of percentage points on income tax, etc. And people don't feel it until it's too late.
Yeah, and obviously it's the sort of thing where in many cases people don't even understand how they get to their net salary. So in some ways they probably don't even notice it. If you think about this from a higher level, lots of teachers now, lots of junior doctors, lots of police sergeants and above, for example, they will be liable to a higher rate of income tax. And now, I'm sorry, but in any meaningful sense, these are not wealthy individuals being paid large amounts of money or anything like that. I do find it a bit problematic that you're having people on fundamentally quite normal wages being liable to a 40% tax charge. And if you take it from a higher level perspective, if you look at this week's news, there's a good chance that they'll increase that 40% to 41%.
Yes. And to sort of bring that into more focus, I think if these frozen tax thresholds had been allowed to increase with inflation, Robert, I mean, where would we be? I think we'd probably be at 40% tax rate starting at probably around 65,000. I think, and that's basically that's the gap there, isn't it, for taxpayers?
That's a big gap. And if you go back and look at it from a even more historical perspective, when Nigel Lawson introduced, in effect, the 40% tax band, you're probably looking at it being 80, 90, 95,000. I'd have to check your numbers through, but it's a massive disconnect between what it is and what it, inverted commas, should be.
And I don't think that's being highlighted enough, actually.
And
so let's start now, Robert. Let's start that now.
and it is perfectly justified to say, is that correct? Is that fair? And the answer may be, if you want the services we get, it might be fair, but at least it's fair and legitimate to have that discussion and to highlight the reality is that lots of people on basically average income or normal levels of income are liable to a higher rate of tax when they wouldn't feel wealthy. They are certainly in London and the South East, where obviously house prices, for example, are basically, inverted commas, silly, probably, relatively speaking, hand to mouth. So what do you think about capital gains then?
Yes, capital gains tax also changed significantly during this period. From April 2023, the annual exempt amount dropped from 12,300 to 6,000, and in April 2024, it fell further to 3,000. This meant that more investors, landlords, and business owners faced capital gains tax liabilities more than ever before. Reflecting on it now, it was a major shift for anyone planning asset sales, and it's still shaping investment decisions today.
Yeah, and then we've also seen the energy profits levy, and that's been making headlines realistically since 2022 when it was introduced. It continues to impact oil, gas, and electricity companies, and even touches things like renewables in some extent. And obviously that's where we're meant to be focusing a lot of our strategic kind of investment from an energy perspective. So it does have an impact on investment. Then obviously it also has an impact on what people pay, on who's liable to it and everything like that. It's a politically sensitive measure. It's going to be significant and continue to be significant. And I don't think there's any easy answers to it in terms of what we have to do next as a country, but it's there. We shouldn't forget it. It continues to be a cost to businesses and therefore in many cases to end consumers, because at the end of the day, it's always consumers that to some extent end up paying these bills, however it's packaged from a political perspective.
And finally, the corporation tax rise for larger companies from April 2023, the main rate increased to 25% for companies with profits over 250,000, while smaller companies stayed at 19%. In retrospect, it was one of the biggest business tax hikes in decades. Large firms had to adjust investment plans, hiring and dividends, distributions. The media coverage was extensive again, and it became a central point of discussion for businesses and policymakers alike.
Yeah, so looking back from today, whether it was dividend cuts, employer NIC hikes, frozen thresholds, CGT reductions or whatever, these changes shape the financial landscape for millions of people and companies in the UK. And they're here to stay to some extent, so it'll be interesting to see how things go.
And even now, their impact continues to ripple through the wages, household budgets, investment decisions and business strategies.
So that's our retrospective look back at the UK tax kind of developments since July 2023. We'll continue to watch how the next budget and upcoming policy changes build on these stories.
The Tax Factor.
I know you were highlighting something before. We were talking about this before, right? HMRC, as part of their drive to improve tax take, they're thinking about looking at AI to look at taxpayers.
The suggestion is that HMRC is using AI to, in effect, look at people's social media posts, try and understand what their lifestyle is, for example, to see if they are, in effect, living within their means or not. If, for example, your social media post suggests you're in some exotic location 2 or 3 times a year on holiday, but you're only reporting a relatively small level of earnings, or perhaps if you've got new cars or, a lovely house that you've moved into, they're potentially trying to kind of combine information available about your lifestyle compared to what you're doing from a tax return perspective. We haven't actually seen the output of that in terms of what it looks like, in terms of how they fully use that data and things like that. And to some extent, they've tried to do some of this stuff historically using analog data in effect. I certainly know that if they thought you had a very nice house and 3 or 4 holidays a year and horses for your children, etc., but you were reporting a low income, they would have thought that's something they needed to investigate. In some ways, it's just taking what they've always done and pushing it forward. But how will it work in practice? It's worth watching the space, I think. And certainly when we've seen HMRC get additional data in other ways and other contexts, they haven't necessarily used it too effectively. For example, international data sharing has been around now for 2 or 3 years. They're getting lots of data from other tax authorities and things like that. Basically, when they get their data, they just issue phishing letters, for want of a better term, to everybody, even when, for example, that information's already been declared on a tax return or something like that, or the individual showing that they're not domiciled in the UK and therefore this income isn't taxable. I think it's understandable what they're trying to do, and I think it's valid what they're trying to do, because they should be targeting people who are being iffy with their income reporting. But I think the question always is with HMRC, how will it be used? Will it be effectively and efficiently and appropriately used? Or will it actually create angst and problems for people who've actually been absolutely legitimate?
Yeah, the concern is probably from as taxpayers, be worried about whether HMRC is literally watching them online. Where's the line between publicly available information and then privacy intrusion? To a degree, they did do that in terms of monitoring people's social media, especially if they're being investigated under Code of Practice 9, type investigations. But there is a bit of a concern around AI taking this to another level and inspectors not really verifying the data that's coming through and acting on it on that basis with a lot of false positives or unfair targeting. All these things that need to be thought through. This is probably going to lead to what we call a lot of nudge letters for us as tax advisors, where they won't have the full information, but they'll just ask for taxpayers to verify certain pieces of information which they think should have been reported.
There is a kind of black hole in terms of people not paying the taxes due and things like that. So it's absolutely correct that HMRC does try and focus on making sure people pay the correct amount of tax. It's only fair on those who do pay the correct amount of tax that those who don't get chased. I'm sure HMRC will say that there will always be human oversight, but like I say, in terms of how meaningful that oversight is, how meaningful those interactions are, my experience of AI to date is it's not as smart as its kind of proponents would pretend it is. I've seen people take tax advice of allegedly smart AI systems, and it's like, okay, well, that can't be more wrong in every way, shape, or form. So
it's like absolutely a very AI does want to please you. So it's very much I would treat it as a very overconfident who's presenting it in the most confident manner, which you do have to check and double check.
Okay, well, talking about tax and NIC, which again is one of my favourite topics, and I am a bit of a social security geek, so NIC is definitely one of my pet topics. Another one of those kind of kite flying exercises has been about whether partnerships and LLPs and the members of those bodies should be liable to, in effect, additional social security, additional NIC.
Well, I think, again, I would go back to basics on this. I kind of appreciate the fairness argument to say that we have most people pay NIC to a certain degree. There's employers NIC for workers. Should there be some sort of levelling up for professional firms such as accountants and lawyers who are generating reasonable profits, and whether there should be a sort of an adjustment. But I think it still comes down to, from any policy introduction, it needs to be how much you really going to raise. And I know Tax have highlighted that there might be a £2 billion raise from this, but what's the timing of this? What are going to be the behavioural changes as a result of introducing something like this, which might not actually give you the result that you wish? I don't know whether that's been played out properly. You might be looking at the figures specifically as to what it might raise, but people will think about structuring out of this. So will you see a lot more LLPs incorporating into a corporate structure anyway? And then obviously they've all tried to carve out a piece for medical partnerships, so GPs, etc., which is an interesting carve out.
Yeah, and I can certainly understand why self-employed should pay higher NIC, especially if you look at the COVID, where they fundamentally got the same support that employees got, and when in fact the employers got. It's like, well, if you're giving them that same level of support from a social security perspective, logically having something which is much similar from an overall liability to national insurance, that makes absolute sense to me. I think the reality is obviously the 2 billion, again, maybe helping fill the fiscal black hole, but it won't solve it totally. And that's assuming there's no counter behaviours and things like that. And, certainly even if you look at law firms, quite a lot of law firms over the last 5 or 10 years have incorporated already. So that might just push it forward, unless you then say, oh, well, actually dividends which come from a company which you invested in or something like that, as an kind of quasi-employee. But that makes it just more complicated and more complicated. I certainly can't understand the logic from a validity perspective of opting out GPs from these regulations, because actually if you look what GPs make with the partners, on average are making, I think, £118,000 a year is the figure I saw. Now, lots of smaller accountants, smaller lawyers, any other self-employed limited liability partnership, they won't be making that much. Again, I can't see the logic of having totally different rules for different professions. At the end of the day, you're either self-employed or you're not. Again, the other side is then if you're self-employed, and everybody would accept that genuinely self-employed partners, etc., in a law firm or whatever, they are self-employed. Everybody would accept that in terms of their employment rights and things like that. So they're no different from Joe Blogg's a sole trader. So logically, again, should you have exactly the same NIC for both groups? I would say you should. I think the idea that you can keep on carving out and trying to have different subgroups all the time, all that does it make it much more complicated for everybody. It's more expensive for the HMRC to administer. And how much will you actually get when you have all these carve-outs and everything? Not convinced you get that much.
Point. And there's also obviously talks around whether there should be thresholds, right? It just adds more complexity, more admin. This 2 billion is a great number to highlight, but in reality, what are they actually going to get?
No, I think it's definitely a problem. Anyway, looking at more seasonal stuff and looking forward to hopefully the best time of the year for most of us, coming up to the Christmas season, and that means, at least for a lot of employers, offering a Christmas party to their staff. That's great. And like I say, Blick Rothenberg definitely offers us a Christmas party, and I'm planning to go this year. I haven't been able to go every year, but I'm definitely planning to go this year.
Good. I thought you were going to say bar humbug, Robert.
I can be bar humbug on occasion, definitely, but I'm planning to go this year. So hopefully I'll be able to enjoy it and not get too inebriated or anything like that. But I think it's just important to highlight that whilst there is a tax easement in place for Christmas parties or an equivalent party in the course of the year, summer party or whatever, whereby employers can provide this benefit to their staff on a tax-free basis, that only applies where the per head cost is £150 or less. And that per head cost includes VAT. Now, clearly, you may find a few cafeterias out there or something like that that don't pay any VAT or charge VAT on their services. But let's be honest, that's not going to be applying to most Christmas party type venues. The £150 is going to be inclusive of VAT. So that obviously makes it a lot harder to get that tax-free treatment, especially as that £150 limit, I think, has been in place since 2003. Obviously, £150 went a lot further in 2003 compared to what it goes to today. The reality is, I think a lot of employers, when they budget for this, need to understand, absolutely provide the Christmas party, but there's going to be a tax charge that you need to account for. And, well, you could put it on the individual's P11Ds, but I don't think that's going to be too popular. So you've got to actually look at something called a PAYE settlement agreement, and that comes with additional costs.
Please tell me that Rachel Reeves isn't going to be trying to attack this or lowering the threshold on this.
I don't think she'll lower the threshold. In effect, again, if you think about it as fiscal drag of a different
it's already happened.
Sort, just keeping it 150 means fundamentally everybody gets caught by it anyway. And basically, if you go over the limit, it's not just the excess that's taxable, it's the full value that's taxable. So I think she's doing very well out of it. And then if you look at the cost of it for the employer, assuming the employer is doing this via PAYE settlement agreements, even if you've got a basic rate taxpayer, so a 20% taxpayer, the actual effective cost for the employer, if they are doing this via PAYE settlement agreement, a PSA, is 42%. Pay £1,000 on your staff, so they have to pay another £420 in effect on top of that to HMRC as part of the settlement agreement. And if you're looking at people who are 40% taxpayers, well, actually you're close to 90% effective rate of tax there. So it is an expensive gift that you're providing to your staff. So make sure they're aware of it and genuinely enjoy it.
Blick Rothenberg, celebrating 80 years.
That's it for me. So I don't know if you have anything to add, Malli?
Just as one of the leads for the entrepreneurial services, I want to give a quick plug for the new entrepreneur section on our Blick Rothenberg website. It's in the topics area. If you're a starting business, growing a business, or looking to exit and sell a business, it's worth taking a look, and we're always happy to talk to entrepreneurs.
Thank you, Malli, for joining me for this special 100th edition of The Tax Factor. Next week, Gary Donald is joined by another new voice on The Tax Factor, Paul Noble. If you want to stay ahead of the latest tax news and insights, you can head over to the Blick Rothenberg website, where you can also sign up for updates on key topics like the upcoming budget. If you enjoyed the podcast, please subscribe and give us a rating or review. But from us, it's goodbye and have a good weekend.
Goodbye.
That's The Tax Factor. You've been listening to The Tax Factor, the UK's top tax podcast since 2023. New episodes drop every Friday. Subscribe now or head to blickrothenberg.com for the latest updates. The Tax Factor from Blick Rothenberg.